All right. Hello, everybody. This is Kurt Opsahl. I'm very glad to be back at ZCon virtual this time. So I miss having you around all in person, but I'm excited to be here and talk to you a little bit about policy in the world, or the wide world of crypto blockchain policy. So we're going to do a little survey of some of the policy issues around the world, how things are going, where they are going, and what's happening right now. So thank you for joining me. I'm going to start out with a little discussion of why policy matters. For those of you who may have seen some of my prior presentations at other ZCons or elsewhere, I often go over this. I'm going to keep it brief today, but to hit on some of these top issues. So policy matters because there's always these sessions where new technologies come in and they aren't a good fit for existing regulatory or legal policy structures that were designed for different kinds of technologies that weren't able to do the same things or did them in a different way. And this creates a lot of uncertainty and risk. Sometimes it makes it more challenging for innovators. Sometimes it makes it more opportunistic for. But one of the reasons we get concerned is things like fundamental rights can get threatened. And then there's the big question, who will be able to take advantage of the new technologies? Will it be authorities? Will it be individuals? Will it be corporations? Like as technologies come in, they disrupt things, and there is a question of how that is going to end up. So as I said several times before, and we're saying again, that you need a systemic approach. Policy, law, and technology. They all have to work together as sort of a tripod that each of the legs is very important because if one fails, the others can help protect your rights so that if the law is unable to do it, then you might have a technology that nevertheless protects your privacy, privacy enhancing technology. The policy may push back on interpretations of the law that will impact rights. And if you don't have that policy, then the law might get interpreted in ways that don't reflect this underlying understanding. So you need to have these things together. And one of the reasons, very important to this community, very important to myself, is that privacy can often be at risk. And privacy is very important, not only for its own sake, but because it helps protect other rights. So that, privacy and what you see, do, read, what you pay for, can implicate your rights of free expression, your political views, your ability to function in society. And so it is a fundamental right that is necessary for the future that we want to live in. So where is this policy happening? Well, it's happening in a variety of places, and we're going to give quite a survey here, traveling around the world. Uh, in Europe, you have the European Union, the United Kingdom used to be part of the European Union till they decided to leave, the various member states, and that's where a lot of it is happening now. That the European Union is putting forth regulations and moving forward rather quickly. The United States, always a big player in policy, but right now the Congress is mostly stalled. The focus in Congress is about the upcoming election and a number of other sort of very high ticket issues that will be part of the election or potentially, so that many other priorities are going to be on the back burner for now. Though some U.S. states are moving forward with blockchain crypto policy. A long time ago, New York came out with its BIT license as sort of the first mover there. A number of other states have developed similar rules. In China, there is some developments there, a difference, and we'll go into this a little bit more between mainland and Hong Kong. And they are creating Hong Kong as a bit of an experiment in how crypto blockchain might work in China. And of course, throughout the rest of the world, there are other places where policy is happening in individual countries. United Nations can be a convening force for international treaties, which, after they get approved, will then be reflected in the laws of individual countries. And how is policy decided? Well, top level, as I say, there's the international organizations, multinational bodies. Right now, it's primarily for the international bodies, the European Union, as it trying to create directives, regulations. Um, And just to give you a sense of how that works, the European Union often decides at a very top level what a policy might be, issue a directive, and then there are implementing regulations, and also each country that is part of the European Union has some ability to implement it in ways that fit within their particular structures. So it is a top level guidance is most often. And this is also similar to other international multinational bodies. Again, like we mentioned, the United Nations, we'll go into a little bit more later, but it can convene things. So the United Nations doesn't have all that much sort of direct things, but individual members come together through the United Nations and try to create international treaties. Then you have regulators, the executive agencies, ministries, ones who may be empowered by laws, but then have an obligation to create regulations that implement those laws. And it is, as we said, oftentimes existing law is not a good fit for new technologies and doesn't come to an easy solution for where they fit in and how they fit in. And sometimes that is coming out through the force of these regulations. And for in a crypto blockchain, one of the primary areas where that is coming in is agencies, ministries, and such who regulate securities or commodities. And so many are, I'm sure, familiar. There is some question and debate of whether it is best to characterize various aspects of crypto and blockchain as a commodity, as a security, as something else entirely not part of those systems. And sometimes that comes out through these regulators. And then legislatures. Legislatures are the ones who are empowered to change the laws that can be the source of the authority by a regulator, or they might be empowered to, if there's an international treaty, a multinational organization, to be implementing that. So they will either be creating or amending laws that will have an effect on crypto blockchain policy issues. And then finally, courts. Courts will interpret these laws and regulations as they apply to the new technologies. So in the European Union, the primary mechanism that has been passed and is now in process is their markets in crypto assets regulation, or MiCA, and is creating a market structure for digital assets in the European Union, which will exist alongside existing law. It is not a replacement for example, securities law, but as a new regulation that comes on top of that. And so right now, it is in the process of developing the implementing regulations. So they had the third and final consultation was just completed last week, where they sought comments and opinions for their drafts and their ideas, and that's some questions that people could write responses. And we are awaiting the resulting regulations. Um, and then one thing, which of course is going to be of great interest to this community, is how privacy coins are treated there, and where MiCA comes out, and we'll see how things come in the implementing regulations, how to do this, but how MiCA comes out is it requires the trading platform to be able to identify the people who are doing it. So if there is a crypto assets that have inbuilt anonymization functions, that's their way of sort of capturing the idea of a privacy coin. And they want to be able to identify the holders and their transaction histories on the platform. The European Union also is doing a lot of policy in the world of anti-money laundering. Anti-money laundering is, an attempt to put rules and regulations that would allow either the prevention or identification of people who are engaged in money laundering. And so they have come out with some new anti-money laundering measures, increasing the due diligence and asking for checks on what the um, customers' debts are, and putting these obligations on, well, the obligated entities. So one of the things that I would like to address here is because something went viral for a little while, There was a claim that there was a ban on anonymous crypto wallets and self-custodial payments. It came from an interpretation of a tweet by Patrick Breyer, who's a member of the European Parliament. And I've looked into this, other people have as well. And they have not actually banned self-custody wallets or peer-to-peer transactions. However, as we were just discussing with MiCA, they are trying to inquire know your customer rules for custodial businesses, which then cannot provide services to anonymous users. In the United States, in Congress, the most prominent bill is FIT 21, which is another market structure bill, so in the same vein as the MiCA. But there are many, many other bills that have been proposed, discussed. It's fairly easy to propose a bill, and it is much harder to get a bill to move forward, go through a committee, get to the floor, become law. But FIT 21 is the most prominent. We'll discuss that a little more in a second. Um, and then in the US, a lot of the work being done right now is through executive agencies like the Securities and Exchange Commissions, the Commodities Future Trading Commission, and the Department of Commerce. And of course, I should also mention here in the DOJ, because that brings us to our next which is courts. There is some regulation by enforcement. So one of the complaints that you may have heard is how policy is done through enforcement is rather than provide clear rules that someone could determine if they can or how to comply with and be able to have that regulatory certainty of what they're doing is lawful. There are instead choosing certain entities to enforce against and having that these questions of law, questions of regulatory policy and interpretation happen in the court system. I'd say that most likely in the near future, a lot of the important policy decisions for crypto and blockchain in the United States will be happening through some of these court cases. So the FIT 21, it is an acronym, as the Congress really loves to have acronyms that spell things out. Financial Innovation and Technology for the 21st Century Act. And this is something that is designed to create a new structure. So it's like neither fish nor fowl is a new thing, a digital commodity, and to provide a structure by which those commodities could have that some regulatory certainty. It may not be perfect, but it's a big step in providing that some clarity. And why I say it's the most prominent one is because it has passed some committees. It could be put to the floor, but has not yet been put to the floor. And as I say, Congress has many other things going on right now, so it may not happen anytime particularly soon. And then on the executive side, one of the more interesting ones lately was a NPRM. That's a Notice of Proposed Rulemaking from the Department of Commerce, and is on cloud computing. And this is uh, an attempt to get more information about how foreign users are using cloud services. It is very focused on artificial intelligence, large language models, and whether non-US persons are going and using US cloud infrastructure to do that, to find out who they are, and in the case of AI, also about some of the things that they might be doing with AI. And this is sort of an example of how some of the regulatory rulemaking processes work. Executive agencies will put out a notice of a proposed rule, give an opportunity for comment. That comment period also ended a little over a week ago, and allows people to say, well, there are these concerns here, or what are things, and then the department is required to review all the comments and then respond to them. And then also sort of notably in the United States, there is anti-money laundering. The Department of Treasury. The Department of Treasury has a wish list seeking industry help to stop illicit finance. And of course, I understand where they're coming from wanting to stop illicit finance. And at one level, appreciate they are saying, the industry can work to do this in a way that is not going to necessarily be regulation by enforcement. But a lot of it is saying, just solve it so that people can have privacy, people can do the things they want, they can have innovation, but you also are stopping all of the illicit finance. And this is sort of saying you have to nerd harder to figure out how to solve and balance all these things. In China, there's an interesting contrast between the mainland and Hong Kong. Though in the mainland, there is somewhat of a tough environment for cryptocurrencies, but it is not bad. And notably, about over the course of a year ago, $80 billion in transactions. So it is going, and certainly the government is aware of amount of transactions of that size. So there has been some crackdowns on mining and some exchanges. There's a lot of concern about foreign currency, taking local currency and converting it to foreign moving capital out of the country. But the regulations do not appear to restrict people from holding cryptocurrencies or peer-to-peer trading. But they have made a new sandbox in Hong Kong, a rule passed last year that would create an environment. Now, there are a couple of exchanges that have been licensed under this rule, allowing some exchanges. So it appears that what China is doing is using Hong Kong as sort of a separate administrated region to experiment with how it might go in creating a regulatory structure, and that may be a sign of what the future will be. So moving along, the United Nations, there's a cybercrime treaty. We have talked about this before. I've seen some of my old talks. The negotiations have been extended. There are still questions about the application of human rights and the scope of the treaty. I have a quote here from Russia, which is they just feel it's too much attention to human rights. And so this will be reconvened coming up in July. And it will likely have some anti-money laundering provisions, but we'll have to see what the next draft looks like. And then, of course, throughout the rest of the world, there are a wide range of things. This makes it complex for worldwide projects, which have multiple jurisdictions that they might be involved in. But it also allows people to have some variance and choose which countries that they're going to be involved in. In U.S. courts, I just want to get to a couple of things in here and a little bit of background. One of the big issues in the blockchain world about various tokens and cryptocurrency projects is whether they are securities. The SEC argues that most cryptocurrencies are securities as investment contracts. The Supreme Court, many years ago, came up with some definition, how in this case, SEC versus Howey, that sets forth the test for whether something is or is not an investment contract. And that has been a key to a lot of litigation. And you may have heard of the Ripple case, where the court held that XRP was not in and of itself a investment contract, thus does not necessarily a security. And they said the programmatic sales was not a exchange, was not covered by this, but the institutional sales were. SEC wanted to appeal that immediately, looking at Terraform Labs, which had come to a different conclusion, but that was denied for the immediate appeal. And so we have to wait for the trial to finish, and then the appeal will follow and likely become a key precedent in this area. Coinbase, SEC versus Coinbase, has also been hitting on some of these issues, whether it's an investment contract under Howey. And they are also invoking a Supreme Court doctrine or legal doctrine, the major questions doctrine, which is the notion that if before a regulator can regulate an extremely important economic, politically significant thing, it has to be clear about it. That Congress has authorized them to do so. So the gist of this argument is that the blockchain and cryptocurrency industry is a very large, economically and politically significant part of the U.S. economy, and therefore you need more explicit action by Congress to be railing it. And so the SEC has overstepped its bounds. The district court unfortunately found that SEC adequately alleged that Coinbase was engaged in this, and this is based on this motion for judgment on the pleadings. And Coinbase is seeking this immediate appeal, and then that will also establish an important precedent. And then I'm sure of some interest to many of you, there have been financial privacy technology cases. Tornado Cash, which has been around as a case for a while, that is a trial coming up in the fall, and a motion to dismiss being briefed right now. So most of the briefs have been put in. The developers made Tornado Cash. Their reply briefs will be due later this month. And a number of the organizations that work on blockchain crypto policy issues have filed amicus briefs to advise the courts of some of the issues being raised here, whether there was enough, what is the level of control over a smart contract which operates independently, lives on the blockchain, whether these were willful violations if somebody else was using it to do something bad, and hitting on a very important issue to me, open source tools and your right, speech right, your expression right to publish code and tools that other people can then download. And more recently, I saw the Samurai Wallet case, US v. Rodriguez. This has just started. There has been an indictment. They are alleging that this was engaged in money laundering and unlicensed money transmitting. And it does illustrate that there's been a more aggressive stance of the United States on financial privacy tools. So, what's next? Well, I think around the world, there's been a growing recognition that existing policy frameworks, regulatory frameworks, are not a good fit, and some policy frameworks are looking to solve for this. They're looking to solve for it in different ways. So some are trying to make regular frameworks that will allow for and promote innovation, will help protect rights, will do good things. Others are more willing to sacrifice those rights and innovation to achieve other policy objectives like national security, enhanced policing, more government controls. And then what can we do about it? Well, speak tech to power. That is, when you have an opportunity to do so, and organizations are also supporting this, help legislators, policymakers around the world understand what the technology is, because if they don't understand the technology, that is where you're most likely going to have troublesome regulations. Get informed, get involved. This is a participatory sport. If we are going to get the future that we want to have, it requires other people. It may be reaching out to your representatives, participating in comments, or even just telling people about these issues so that more people are understanding and aware of the policy issues at play. And you can also support organizations that are fighting for you. All right, well, that brings us almost to the end here. So I will open the floor to some questions. All right. And so it looks like I have the first question. Do you envisage European regulators augmenting or adjusting MiCA to hamper, marginalize, and even criminalize peer-to-peer use of privacy technology like Zcash? If so, what attack vectors might regulators seek to use and accomplish such goals? So at least I am heartened by the that right now peer-to-peer use of privacy tools, self-hosted wallets, are outside of the scope of what they're looking at. They're looking at exit points, so that a policy balance that they've put out is that if you do things amongst yourselves in this other way, that's okay. But if you go to a regulated exchange, they want to know how the money gets out. Now, exit points are very, very important, and at some point things do need to exit if you are going to use them in other aspects of the economy. But that is a balance. I don't know if they are going to expand beyond that. Probably not through MiCA. The MiCA text has been closed for a while, but possibly through some anti-money laundering provisions. There's been a lot of pressure on anti-money laundering that have come from reports of funding going to Hamas in relation to the conflict in Israel, or going to Iran, going to Russia, and this has heightened the political pressure on anti-money. All right. Last question. Um, are there examples of countries, in your opinion, overall crypto policy regimes that the U.S. and others should try to emulate? Who is doing regulation well? I don't know if I have like a favorite country that is doing it, perfectly and should be emulated around the world. I think it is at least interesting that there is a number of countries that are being innovators in the area, and some of the smaller countries have definitely been more friendly to crypto and blockchain policies. But crypto blockchain is also a worldwide technology. So, a few countries here and there would need to sort of band together and say, this is what we think is right, and then push it out to a wider sphere. So these things will continue to evolve, but we need to get at least, some fundamental issues as a policy model agreed upon, and we're still working on that. All right. That's it for the questions. Well, then I will say thank you so much for everyone being there, and I really appreciate the Zcash community, people who really care about some fundamental rights and wanting to make sure that we can make a better world where those rights are established and protected. So thank you all. Uh, Take care.